Good morning, traders. I'm Greg McKenna. Welcome to Markets Morning. It's the 16th of October. A really poor night for stocks in the US. They closed weaker, and although the close was above the lows of Friday, it wasn't pretty by any stretch of the imagination. Just quickly around the ground, we've got the S&P 500 2750 resting right on that weekly support, looking ominous. It fell 0.6%. The Dow was only down 0.35%. The Nasdaq 100 fell 1.24%, 7,068. Again, looking quite dangerous. An inside day, kind of within an inside day, is ominous. The rally could not be sustained last night. Bonds didn't really care though. They're still at 3.16 for the 10s and 3.86 for the 2s. That was despite retail sales missing by a mile, with a 0.1% print for September. And the Atlanta Fed downgrading their expectations from 4.2% to 4%, On currency markets, they did care about that weaker data, and we have seen the US dollar lose ground. Dollar index at 95, so it's still in the range, but at 95. Euros now at 115.80. Sterling recovered all of its losses this time yesterday, which is a bit of surprise, but US dollar weakness will do that. Brexit, Donald Tusk said that Brexit, or a clean Brexit, or a negotiated Brexit, I should say, is as far away as it's ever been. Dollar yen, though, has noticed the stock selling. It's at 111.78. Aussie's up at 71.38. Just got a bit of a lift from Kiwi data. The CPI at 0.9% was higher than expected, and the Kiwi, which had already been ripped roaring, was at 65.50 odd at 7 o'clock. Or at 8 o'clock, I should say, is at 65.83 now, up another 0.5%. So that's about a 1.2% rally for the Kiwi. Dollar CAD is down a little bit. Let's dive straight in. Gold, of course. Gold rallied. Perfect setup for gold. Got to 1234, which is a Fibonacci level. That's important. Bitcoin's had a roaring kind of move all over the place. A big rally, then a big sell-off. It too respected Fibo levels. Let's dive straight in, and we'll kick off with currencies, and then we'll go around to... we'll go to commodities and then stocks. Now, everything's a bit of a mess because I've tried to clean this up, but I can't see where my euro chart, there it is right there. Right, euro. So what have we got? We've got this double top kind of thing just above 116. This is the 4-hour chart. So on the dailies, you can see that if I blow that up, we've got, it looks one to maybe the pulse for the next move higher. Certainly that could be the case, but at the moment you've got to get up through this 116.10 to 116.30, which is the Fibo, and then you can run to 116.74, and if that goes, then you can really get a kick on. So, I'm not a big one for cup and handles, but if you got a move above 116.30, then you could easily see a run to the highs. You really could. But the US dollar's looking weak. And as I said, how can the US dollar rally if the data's weak? It's negative 5.4, so it's not shooting the lights out. And if you think about what's gone on this past 12 months, it's only been stronger than expected data that's rescued the US dollar. Now, the reason for that is folks want to think that this sugar hit that the US economy has got will fade. Folks want to believe that the yield curve at 29.5 right now means that there's a recession coming around the corner. Folks want to believe that this stock market weakness means the US recession is coming, though they're not saying the same about China or Europe or anywhere else. This is the bias that traders have. They don't like Donald Trump, they don't like the US dollar, and that's been reflected in how hard it is for the US dollar to retain upward momentum. Now, in my Markets Morning email this morning, there's a great chart from Nordia Markets. Have a look at that. The US dollar, according to them, based on US dollar liquidity, should peak in November or December. I'm on board with that. I'm not raging against the bias of the market. I'm just reflecting it. If we understand how hard it's been for the US dollar to rally, how hard it is for it to hold gains, then in this back half of the month, when there's less US dollar positive data out, then this is when the US dollar generally tends to weaken. So we've just got to know that. So keep an eye on euro. And obviously what euro does, what the DXY does will impact on others. Now, dollar yen is down because stocks are down, but also because the US dollar's down. And that in itself is then feeding into more US dollar weakness. Now, we've been on this move since the reversal and the breakdown there. Now, where are we now? We're down through 111.96. I think I said last week 110.40 to 110.70. That's got to be my base level target for the moment. If that's the case, then euro probably is going to go higher. If we have a look at sterling, this is a daily chart for sterling. You've got to say that was a good result. Think about it. At one stage yesterday morning, sterling was down at sort of 130.85.90 thereabouts, and looking quite wobbly. Naturally, Brexit could be an utter mess, but it was US dollar weakness that's driven it back here. I'm still sceptical of Brexit. I'm still worried about it. You've got to listen to what Donald Tusk says. You've got to think about what this Irish border issue is. Now, I'm too far away from it, but I know that some of my friends who are Irish are genuinely concerned about this. So it's not just something that Theresa May can sweep under the mat as she's tried to. It's more something that is a genuine concern to the Irish people on both sides of that Northern Ireland border. So it's an issue that needs to be fixed. So for me, headline is a risk, but the overall uptrend's remaining. It's got to break 133.13 for me to get really excited, though, and I think that would take genuinely positive news. There's an EU meeting this week. Looking at the Aussie dollar, it's grinding high. This is the 4-hour chart. You can see this little uptrend. If it fell back down through 71.15, it would be under pressure. We've got the Westpac leading index of economic growth out today. It's nothing special. RBA minutes will probably be more important. Ian Harper last night, I've linked it in Markets Morning note this morning. Ian Harper last night in an interview with James Glynn of the Wall Street Journal, which is running the Australian, talked about the RBA being worried about consumers. Now, property prices are still falling. Employment situation is really good. That's about the only positive. The difference between Australia being in a genuine domestic market funk, economic funk, I should say, and where we are here, which is kind of just muddling through, as John Molden would have said, is employment. Now, Thursday's employment is expected to be good. Certainly the NAB Business Survey tells us that. If it's not, then we will genuinely start to worry about the Australian economy. As you see here, the key thing here is 71.60. If 71.60 can break, then you're easily back 100, 110 points higher if that is the case. So we'll keep an eye on that one. Dollar CAD, I mentioned yesterday in the weekly version of this chat that dollar CAD's in this nice little downtrend. In terms of here, it's often the case that you get a break and then you go back to retest it, isn't it? You've seen it 1,000 times most likely. And we kind of saw that last night if we go just there. And I'm getting new glasses in the next week because my eyesight's gone to the pot. But you can see that. So it's kind of angling down there. My bias at the moment is that if dollar yen's going down, if euro's pointing up, if Aussie's pointing up, and if the Kiwi's ripping, then dollar CAD is going to be biased lower. Speaking of the Kiwi, look at this. This is the 4 hours, of course. We're now at 65.95. Give it 10 points. Call it 66.05. If it gets through 66.05, you're going to run to 67 cents. That number, 0.7, was an important number because folks were pointed the other way. I'm not going to say someone had the number because of that rally we saw last night, but somebody definitely punted on this being a lower number. Now, you see, this 67.20 is significant resistance. If it can run there, it's got to get through the Fibbo level first, but if it can run there, it can really run. Now, gold, it's done what it's supposed to do. It rallied. The environment's good. I haven't even mentioned the Saudis and the fact that it looks like that's going to be swept under the under the carpet, under the Turkish carpet, if I could be so bold, in what's looking increasingly like either a Tom Cruise or Matt Damon, Jason Bourne style movie. We got up to 12.34, off a little bit, but the preconditions for a rally in gold are building. 34 to 40 is still, for me, an important level. And then 50.52. If it gets through 50, then it can really, really run. But it's got to get through 50 first. $4 below my first target, which was 38. That's not bad. But on a weekly basis, it does look like it's still got further momentum higher. Copper was down last night. Still within this range. And still nutting along. There's an increasing sense that Chinese economic data is weak. We get the CPI and PPI out today. That'll give us a sense of price levels, ability of businesses to charge, all those kind of things. but copper is stuck within this broad range just at the moment. So nothing really for me there, although on that basis, looking at that chart, that would be more down than up. Now, speaking of oil, the Khashoggi thing, I've talked about it. What seems to be happening? They're blaming rogue elements. President Trump gave them that free kick. Steve Mnuchin, who used to be a Hollywood producer, he actually produced quite a few good movies, including the one with, I can't remember anyway, it doesn't matter. A couple of good ones. Anyway, what do we get? We got the Saudis taking up that line now. Rogue elements swept under the carpet. Mike Pompeo, ex-head of the CIA, going over to see the king. So what do we got? We've got a failure at the uptrend line and a reversal off. That to me suggests lower levels. Now the level to watch is 80.40 in Brent and it's 70.50 in WTI. While they hold, not going to get too bearish. If they break, another couple of bucks lower. So that's a big reversal. And the MACD, even though we're in sort of oversold territory, the MACD suggests at least a test. So that's a buck from where we are now, at least a test of the lows for WTI. If I have a look at stocks now, and let's look at the S&P. I've got the weekly chart ready for you. You know, that's resting right on. Let's blow that up. Resting right on. Now, as I said, on a daily basis, you know, it's not even as low. The close isn't as low as the low point from Friday, which is certainly not as low as the low point from Thursday. The key thing here, Apple under pressure. Goldman Sachs put out a story saying that Chinese demand for smartphones could be about to hit the skids. Apple finished on its lows. The FANGs are under pressure. The tech stocks, which were the leaders. Remember, there's no way in heck that the S&P 500 would have got to 29.39 were it not for a very, very, very narrow range of tech leaders. If they're under pressure, then the index naturally floats lower. The majority of stocks are under their 200-day moving averages, which is an interesting sign. So I retain my bearish bias there. In terms of the local market, if we have a look at the weekly here, depending on where you draw it, on my other chart, it's actually right on it. But have a look in the, that's a monthly chart, sorry. Have a look in the daily note. An inside day within kind of an inside day. That's not a terrible day. We finished flat on the day. Yesterday was an awful day on the physical for the local market. Well underperformed what most people thought would happen, but 58 points was only 7 points worse than the SPY suggested on Saturday morning. So we keep an eye on this. My bias is still for lower levels, although there's no point me getting too bearish unless or until last week's low break. While we're outside the Bollinger Bands, you know what that means. We've moved far, we've moved fast, and a consolidation within this kind of range, either side of that big Friday bar, I guess, or Thursday bar, I should say, would probably be a good indicator. Now, in terms of the DAX rallied last night, so it's going to look different. It's likely to open up under pressure this afternoon, the physical at least, but for me, it's below the breakdown level in daily terms, which was 11.8. In long-term weekly terms, it's 11.7. I'm still targeting 11,000 medium term for the DAX. And did I mention the NASDAQ? NASDAQ obviously had this down day, so we keep an eye on that. And 6833 would be a reasonable place for it to test sometime soon. In terms of Bitcoin, you know, the reason Bitcoin rallied yesterday and Ethereum and all that other kind of stuff was absolute BS. You know, because Tether fell to 93, as people question whether or not Tether's actually tethered and there's actual money there, then we'll go and buy Bitcoin. That makes no logical sense. But I don't care about logic when it comes to cryptos. Cryptos trade beautifully. They technically trade lovely. They are just like Asian currencies back in 1998 when the pegs broke and I first started doing, I went, heck, let's just see if this technical stuff works. And Fibos worked and that kind of thing. And look at what we got. You know, this is going to be a messy chart. But so you had this little tiny range across here. It broke, we ran. Where do we run to? We ran to the 50% of this move to this move, which is where we've been constrained. All right, so 7344 or thereabouts. What do you call it? Reuters is saying it didn't quite get that high, but it's obviously going to depend on where your pricing came from. The key thing here is that Bitcoin tried to break out of this longer term trend and could not. It did, however, could not on a closing basis. It did, however, and it has for a while, broken that one. So having been focused on the downside, it's now broken topside. So what next? I think you've got to drop it down to the 4 hours or the 1 hour. It's getting really messy, folks. That kind of volatility is weird. The rational reason for the move in Bitcoin just wasn't there. But as I say, it broke out. Trades technically really nicely. That's it from me. China data today is going to be really important. We've got EU trade, German ZEW. In the States tonight, we've got industrial production, and there's something else, I've got a mental blank, and the NAHB housing. That's going to be interesting because folks are really focused on weakness in US housing. And folks, I want to say thanks. This, according to YouTube, I had over 600 views yesterday, which is the most I've ever had. I'm spending zero promotional dollars, so it's all about you, and obviously you sharing and somehow getting it out there. This is more than I ever had at Axie, and they had money behind everything I did. So thanks, folks. I'll catch you tomorrow. Bye for now.